Hey traders, let's talk about one of the most popular indicators out there, the RSI. So many people get this one wrong. They see RSI dip below 30 and immediately buy, or see it pop above 70 and instantly sell. If you're doing this, you're probably losing money, and I'm here to show you the right way to use it. First, RSI stands for Relative Strength Index. It's a momentum indicator that measures the speed and change of price movements. We'll stick to the standard 14-period setting. Now, those famous 70 and 30 levels, they aren't magic reversal signals. Think of them as warning zones. Above 70 means the market might be overbought and stretched, while below 30 means it could be oversold. The key word here is asterisk, might asterisk. The secret to making RSI work is context. This strategy thrives in range-bound or slowly trending markets. It fails miserably in strong, powerful trends where the RSI can stay overbought or oversold for a very long time. So step one is always to pick the right market. Look for currency pairs moving sideways or in a gentle channel. The best time frames are the 15-minute, 1-hour, or 4-hour charts. They give cleaner signals without too much noise. So how do we trade it? Let's look at a buy setup. You see the RSI dip below 30. Don't jump in yet. You need to wait for two things. First, wait for the RSI to actually start turning back up and cross above 30. Second, look at the price chart. Is the price bouncing off a clear support level or a recent low? You need both momentum and price confirmation. When you see a solid bullish candle form as the RSI is recovering, that's your entry signal. For a sell setup, it's the exact opposite. Wait for the RSI to go above 70. Don't sell yet. Wait for it to turn down and cross back below 70. At the same time, check if the price is hitting a resistance level or a recent high. Once you get a bearish candle closing with the RSI falling, that's your cue to enter a short position. Risk management is non-negotiable. For a buy trade, your stop loss goes just below the recent swing low. For a sell trade, place it just above the recent swing high. This ensures you're out if the setup is clearly wrong. For taking profit, you can target the middle of the range or aim for a simple risk-to-reward ratio like 1:2. Consistency is key. Remember, the biggest mistake is fighting a strong trend. If the market is rocketing up, don't try to short every time RSI hits 70. You'll get run over. With discipline and proper market selection, a realistic win rate for this strategy is around 50 to 60%. It's a game of patience, not rapid-fire trading. So to wrap it up, use RSI as a tool, not a standalone signal. Combine it with market structure, support and resistance, and price action confirmation. Do that, and you'll turn this commonly misused indicator into a powerful part of your trading plan. Thanks for watching. If you found this helpful, give this video a like and subscribe for more practical trading strategies. See you in the next one.